Welcome back, and let's carry on with the requests. I think the first one was Massmart, and there you are. Let's have a look at Massmart. I mean, there's the big resistance. Very interesting. We see now that a lot of shares are basing, and there's a resistance that needs to turn into a support. But it looks like if that resistance turns into support, we usually get a beautiful rally. I mean, this level is sitting at 37 Rand. And I mean, if we can break above that, then this resistance line will turn into a support. Fundamentals of Massmart wasn't that great the last couple of days. It came out. But I mean, can you believe it? I mean, this share is coming from 64. I can remember when the share was well above 100 Rand. I mean, now it's trying to find its feet above 37. So for me, if it breaks above 37, yes, it will probably trigger a buy. If you buy above that, I will not use this stop loss. I mean, this stop loss is, can you believe it? I mean, it's 31 Rand 52 cents for a stop loss. That's a massive stop loss. I mean, it's just too big for me. I will then rather just leave it. But I mean, if you buy it above 37, let's call it 38 Rand. If you buy it above 38, I'll use a stop loss. I will take a little bit of a lower one. I'll use a stop loss at 36 Rand and 70 cents. I mean, that's about the 3 Rand stop loss. I like sometimes to use the low of candles, but it looks like this one is almost on a 4%. If you see that you're wrong by 4% on your capital, maybe look for something else. There's something else. If you buy a share quite low at the lows where it's trading now, sometimes you need to say to yourself, how much lower can that share go? And then you must say to yourself, if you then buy the share and your stop loss is maybe just not just not too big, then you must suddenly see that it will trigger the stop loss and it will turn around and it go up. So if I usually see a share doing this, coming from high-low, from very high levels, bottoming out, and maybe you like the company, then I will say, don't go and buy a lot, buy a little bit, and then see if the share can maybe break the support line, see if it, resistance line, turn it into a support, go up, come back to test it, maybe add a little bit to your portfolio, and as it goes up, you can always add up on the way up. You don't need to buy everything at once. I sometimes, let's say for instance, I want to put 100 Rand into a share, I'll maybe put in 50 Rand at the first lot, and then next lot I will see that I'm right, I'll maybe add another 25, and then I just sit. But I first need to get the direction right, then you know you're on the right track. Let's look at Trean Energy Group. Strange enough, when I got this request, I immediately thought about shares like Sanlam, Old Mutual. There's quite a few of them in that camp that's doing insurance, even Santam, but that one rallied beautiful already. But some of these insurance players around the world is struggling a little bit. The only thing that I can think about is that usually insurance companies are proxies of indexes, proxies of countries. And like South Africa, Sanlam is a major investor in the local market. If the local market does well, the share price of Sanlam will do well, like Old Mutual as well. Look at Trean Insurance here. For me, it is on a downtrend. There's the beautiful the line that will tell you that the trend is to the downside. It will say, yes, be careful. And then I've got this line there. Just draw in that. And what I see here, I see immediately, I see a falling wedge developing. So where do I buy the share? I only buy it above $5.23. If you buy it above $5.23, your stop loss will be $4.87. And where can it go to? It can easily go to $6.05 and even maybe $6.08. Let's call it $6.10. So for me, it's quite simple. The slope is down, the momentum is down, but what we know over time, the falling wedge usually trigger a beautiful relief rally. So yes, stick to your stop loss, wait a little bit, and if it bounces, by the way, just look at Sanlam's and Old Mutual share price. You'll probably see the same kind of thing. They struggle, and at some point in time, they will maybe give us a beautiful relief bounce. Let us look at the old giant Anglo American. I mean, this is a massive conglomerate. I mean, this company is involved with the mining industry and with commodities for millions of years, plenty years. what I see is, I mean, the share came all the way down. Can you believe it? From well above 800 Rand, 830 here in 2022, May 22, March 22, sorry, March 22. And it fell all the way right through, can you believe it, to a recent low of 507. But what I like about the company now, it looks like it's slowly but surely picking up its head again. In actual fact, just this morning, someone asked me if I like the commodity shares. I said, well, the first thing, I don't like the commodity shares. I like the charts. So the charts usually tell me what I like. And I mean, there's the low, higher low, higher low, higher low. And there's the level. I mean, we're maybe a little bit late already to buy it. I'll look at the candles now. There you are. I mean, above this, there you are, above 602.61. It can easily go another notch higher. But let's just have a look at the candles, because usually if I start looking at timing, I always say to myself, where will I actually buy the share? I think we're a little bit late, and I'll tell you why. Because look at this beautiful, the sell-off here was quite severe. Then we saw this little bit of a breakaway candle here, breakaway gap. It closed, but this gap tells you that there was positivity that day, and since then it just went higher. So for me, quite simple, it must get above 605 to trigger a beautiful relief rally again, once again confirm another higher higher. That looks positive, and maybe it can close this little gap here. You will never know. And that gap sits at 643.57, and it will close at 656.34. So if it closes this gap, I think maybe the easy money is off the table, and maybe you need to lock it in. And for me, if you don't buy it, or you didn't buy it, and I did not buy it because I did not pick it up here, so I will just say to myself, well, I will find something else. We can't forget there is hundreds of shares. In the world, there's thousands of shares. The other day, I actually watched a video where somebody say almost every day, 50 to 80 new exchange-traded funds is listed around the world. I mean, so there's so many opportunities. If you do miss one, look for something else. Unless you like the company, then you stick to your stop loss. And in this case, if you do buy above that, my stop loss will be 558.59. And maybe it can go higher again. Very interesting chart, this Exxon Mobil. And this one is listed in America. What it tells me, remember, these companies printed money with the oil price going up. The oil price is slowly but surely coming back. And what this share is telling us, I mean, from June 2022, I mean, that's about 2 months ago, 3 months ago. I mean, this share came all the way back. It went down to about $81. It went up to, can you believe it, just the other day, almost $97, almost reached for 100 again. And now it's back again around these 90 levels. For me, this chart is telling me something. This chart is telling me, yes, maybe everybody is right on inflation. The share price came back a little bit on that. Because remember, they always say inflation is lagging. And I mean, if you go up straight away, go to the top 98 and come back. So what it maybe tells you that the top of inflation, when you hear the figures of, let's say, 5 or 10 or 8 or whatever the case may be, usually that's already passed. And the share price of Mobil is maybe telling us that inflation already maybe peaked in, let's call it June, July, and we still get ugly figures. But if I hear about the Bank of England very nervous on interest rates, nervous on a recession, it maybe tells you that this inflation, although the chart is telling us something, the inflation can maybe be longer with us. But let's look at it. Somebody wants to buy. There's this little gap, and that gap, let's say above that little line, let's quickly draw that line in for you. Because I think this person believes that we can see another, it's a double bottom, a low, a higher low, maybe wants to get another higher low. And I think if you want to buy above 89.60, make use of a stop loss of 86.28. And I mean, your first target to the top, can you believe it, will be between this gap. I mean, that's almost 2 days away if it rallies quite hard, 90.54. and that gap will close at 90.79. So maybe it's a tiny little club. So let's see. Hopefully it can close. Let's look at Vertex Incorporated. I mean, look at the share. I mean, it rallied all the way. Can you believe it? I mean, this is about 2 weeks of trading, né? It rallied from $9, you can almost say $9, and it's now at $12. I mean, that's a 30% rally. I mean, and that's what usually happens if you see shares falling from 16 to $9. If it bounces up, it can give you a beautiful bounce. So for me, unfortunately, this viewer, I like the chart. The chart looks beautiful because it gives you higher lows all the way. It is also, you see, early in the show, we talked about resistances that turns into supports and getting tested now. Yes, it changed this $12.26 also into a support. That is positive. And what do I say now? I mean, will you buy it? I mean, after a 30% rally in a matter of a few days, I would rather just wait for it to come back a little bit. So for me, maybe it coming back all the way to test that little line. Let's get that line for you. That level is sitting at $12.21. If it pulls back to $12.21, there's nothing wrong to buy it then, because then you've got a beautiful good buy case. And where's my stop loss then? My stop loss is a nice tight $11.41. That looks better to me. But I mean, buy a share on a bounce 30% higher and you go now initially, then rather wait a little bit, wait for the share to pull back and then you get in again, because then you've got at least a little bit of a breather. Maybe it goes up another few days, you buy it right at the top and then it comes back and then you burn your fingers. That's not the idea. Well, thank you for watching the show. Thank you for sending all the requests via Twitter or email or wherever you want, even WhatsApp. Visit our website www.fransdeklerk.com and we will chat again.